Good morning. All right. Good morning. I need ability to share, please. Yeah. Good morning, Mr. Ezekiel. Please give me the ability to share so I can share my screen. Good morning, everyone. Welcome.
Yes.
Who is the host?
Dr. Chairman, sir. Chairman, I think you are the host, sir.
You said he wants to step out.
I'm watching my trade on you people. So if SMC will
Me, I'm out already. Dr. OJ, please. I think you should
So
be out.
initiate if you want to initiate
I've already sent the request, Mama.
Okay, I think it's already the host.
Raise your digital hand. It's chairman that is the host. Or
is the chairman out?
If
Dr. Said he wants to step out.
Please, can you take the hosting, Dr. Love or Auntie Shampepe? Let's take the hosting from chairman if you are stepped out. Dr. OJ, please, I don't know if you should leave that trade. I was distracted yesterday and I didn't leave the trade, so I got messed up. So I think I won't try that.
No, I'm rounding up now. I'm waiting while they share give me the host.
Please don't let your blue turns to a red. Please, I missed yesterday.
No, that.
Please, sorry, I'm breaking in. I need the help here.
Say that quickly, ma.
I don't know how to close my trade on laptop.
Go to trade on laptop.
Yes,
oh my God.
There's an X at the end of. You see where the trade is running, Mama. There is an X.
Yes.
X.
At the extreme right, right?
Mm-hmm.
Where the trade is running, extreme right. Please use your phone most times. It's more flexible. Have you seen it? Close it, please, and take the profit.
I've not seen it too.
Oh my
God. Okay. On the top, right?
Is that where your trade is running? Where is your trade running?
On the laptop.
Bottom or top? Is it at the bottom or at the top? Where are you seeing your profit now?
I'm seeing market watch, but I can't even see I can't see the market reading.
I'm coming. Not the market read. I want to see the trade you took. Laurel. My wife trades MetaTrader 5 on laptop. Me, I'm not a fan of laptop for MetaTrader. So I'll get back to you, madam.
Thank you, sir.
Dr. OJ, if you are the host, you can take it up. You can take it away, ma.
No, I'm not the host yet, sir.
I've made you a co-host already.
Okay. All right. Okay, I got it. All right. Good morning, everyone. Welcome to another day of training. So yesterday, when we were trying to decide today's training, I already got off. So I told my partner that I'll let everyone know. My morning schedule is very tight. Once I wake up for this morning sessions, I usually have to get off at 5 exactly, because that's when my family gets up, or at least I have to get them up for morning devotion. And for me, that appointment with God is most important. So I would never break it for anything. So yesterday when we were making this decision, I was not in the meeting room anymore. So just FYI for future things like this. But yeah, but as per my wonderful partner and I, we're team players. We decided that we're definitely going to run with it. So this morning, I'm going to be taking you guys on just a quick illustration of how SMC works, and basically using that to help us to implement our learning, so that way everything that we're talking about, fair value gap, all the key zones and things like that, we can understand it very well and we can start to do it. The only way that this will work is when you actually do it, when you take the time to get on your chat and just use some of the indicators as you need to, and of course just your knowledge. Okay, so let's get started. So this morning, let's look at this chart. This is the current chart we're in right now. See this sell that chairman called this morning? It's still going. Me, I took TP1 and 2 just in case, before anybody will say anything. Before
Hello,
I got
doctor.
yes.
Okay. TP2, we've already hit TP2, I think.
Yes,
Confirm.
we did too. Yeah, confirm, sir. Yes, sir.
Okay, please, let's also put that, everybody, please, let's put that on the WhatsApp group. While we're doing that, doctor, okay, so please, what I actually wanted on this session is practical. This session now is practical application. How you were able to apply SMC to pass your 2 challenge accounts. That's actually what I want. No theories, practical application. How everybody can take that knowledge and apply in their own personal trading. So everyone on the call, please, let's go on the group. Let's put TP2 hit. Let's do that, please, everyone. Let's do that. It's very important. I think with TP1 and 2, you should have done, most people should have already done their 10%. All right, with TP1 and 2, most people should have done their 10%. Everyone, please, let's go on the group. Let's put TP2 hit. Doctor, over to you. You can go on. Thank you.
All right, sir. Sorry. So sorry. Okay. Yeah. Let me. Okay. I'm gonna start sharing my screen again. So. All right. Yes, Chairman, you're right. Yeah, I heard Ezekiel told me. So basically, when planning a trade for maybe just a daily trade, so let's look at the most recent aspect of the chart. This chart right now is at this particular space. This is the call that Chairman made this morning. So I have my indicators typically set up to kind of help me identify, the key zones and things like that. So you can see that the Lux Algo fair value gap indicator is working. So highlighted in green here. So this is just an easy entry for anyone. If you remember our fair value gap lessons from last week, once you mark it and identify that area and you use the indicators, I was using the indicators and I of course also use the knowledge of understanding key zones. Let me start with the key zones first. So when you get in the market, sorry, I need to move this. Let me move this. Okay, so this is the 15-minute time frame. But before I do anything, you don't start with the 15-minute time frame to analyze the market. You actually start with the higher time frame. I start with the day just to see what the chart looks like. It's a bit, let me see. I have to move this. Okay. Can everyone see my screen? Okay. Oh, sorry. Okay. Okay, much better. Why? Sorry, my screen is playing tricks on me. So this is the day chart. I was trying to compress it. All right, so I start with the day chart just to look at what's been happening in the market. And I use the horizontal line to mark the support and resistance. So this is kind of like looking at, let me compress the chart again because it's not all the way there. Okay, it's better. All right, cool. So we have our support And we have our resistance and our support down here. This is too, I'm not taking the one down here because it's too far out. So I kind of stay here, sort of like midway. This one right here. Why am I choosing this support zone? Because it has more key zones. So the price touched this level here, one for the past couple of days, it touched here. So now that we've mapped our support and resistance on the day chart, then I go back to the 4-hour chart. The support line from the day will still be there, but it looks a lot different on the 4-hour chart. So now I look at the 4-hour chart just to mark some key zones. So here on the 4-hour chart, you're going to see where my line is. This is another resistance level here. This is a key zone 1. So when I get to the 4-hour chart, I look at the key zones, not really just looking at where the price is stopped. Because for the purpose of this training, I'm going to use my trend line so I can show you. So here, we have one key zone here. Then we have another one here. I can just clone this and move another one here. So basically you can see that the market, based on that, well, I could draw a trend line as well. Let me show you. So the trend line shows me that the market has been on an upward trend, but here there was a breaking structure here, right at the middle here on 33.83. Breaking structure. Well, it started up here. This candle, the first candle right here that crossed the break of structure. So there was a breaking structure and there was a change of direction in the market. Now we're back on a downward trend. So that's why you see that this indicator right here is showing that this is the area that I'm going to focus on. So now that I'm done with mapping that out, then I go down. I don't take my trade from the 15 minutes. I do the 5 minutes. All right, so using the fair value gap system, you can see that all of these things right here, which area do you think will be the best place for me to look at? So when I look at the areas where there have been the impulsive move, here, it came down, then it did another one here, and then it came down. But this area has the most opportunity. And this is where Chairman picked the trade from. So how do you pick a trade using this system here that has been drawn? I mean, once you see the impulsive move and you get to the top, I mean, based on how we did the trade this morning, how would I map it out? I would use the indicator. So the indicator already told me, it's already helping me helping me reach the 50%. This is the equilibrium right here in the middle. So taking it out of theory into practicalism, once I see the red candle form, the first red candle, that is my signal to know that, okay, there could be a reversal coming on. But I don't take a trade until I see the second candle. I wait for the confirmation candle. And you can see now that once this red candle formed right here, this first one, the second one is a hammer candle. It formed, but then it was kind of pushed. I mean, there was a green candle. That's what they call the fake out candle. So basically, it might want to let you know that, okay, maybe you think there is a buy that wants to continue, but you have to watch for it. And you're going to see that the long wick that is showing here indicates that even though the green candle formed as a buy, but then it was pushed down. So once it is pushed down, that tells me that now there is a reversal that is being confirmed. So by the time you get to the third one, even though it might be a buy candle as well, based on the wick is pushing down, that would give you a good entry point. So this particular entry point right here, once you see the candle formation, the way it looks right now, it tells you that this is a good entry point for you to take a sell, because there is a reversal already forming, and that's where you kind of put your entry point right here, right above at this point. I know some of us can remember last week when we talked about this is, it's not within the premium zone, but then it's right here. I always try to get in the sell early. Once I confirm with the first three candles, I always try to get in there as my entry point. Once I see this next candle forming, I get in. Once it starts pushing down, then I know that there's a sell. I get in the position. And usually the way I set my stop loss is I do 20 up and 20 down. And then I increase the, the take profits as I go along. So basically right here, you can have up to about 3 or 4 take profits. So once you enter a sell here at 33.27, possibly, then you can set your stop loss to where this green candle, just right above this red candle, just right above this red candle here. This is 33.30.26. Why am I setting it right above the red candle? Because if I set it right on the red candle, chances are if there's a retracement, because this spot has been tested and the price has hit there, then it might stop you out. So you want to set it just slightly above the red candle. That is the highest point of this zone right here. So for us to take a sale, like just making it very straightforward and practical, because I keep it very simple. So all the steps that we take in identifying the key zones, once I get to this 5-minute countdown, I look at the chart with my fair value indicator in there. It automatically tells me, okay, this is where I'm going to take my trade from. And I just make it very simple. So I go to the highest point of the candle. Let me put a trend line there so that way we can see it's what I'm talking about. So that way it's easy for you. So you're able to set your stop loss by yourself, and you're also able to set your take profit depending on what your trading plan is. Another thing you have to bear in mind is your trading plan. So your trading plan will determine, okay, what your trading plan, what your take profit is. You're willing to risk how much? Stop loss here. So when you look at the stop loss, 33 points, let me see, I don't know, where's this point right here? It's at 33.3330.59. Perfect. So I'll set the stop loss there. And then the rest of it is just me going down gradually with my entry point right here. My entry point is right here, right where this candle pushes down. This is where I'll set my entry point, because once I have a confirmation candle, once this candle forms, goes this full candle, that tells you that there is a strong selling action coming. There's a reversal coming, but you have to wait to confirm. So how do you wait to confirm? You wait to confirm by looking at this candle right here. The second candle is your confirmation candle. Why? Because yes, it formed as a buy, and that might let someone who's not experienced think, oh, the buying action is continuing. No, But once you see that the candle is pushed down into a hammer, you see, oh, wow, okay, the long wick tells you that the sellers are trying to take over for, sorry about that. The sellers are trying to take over for a reversal. And then the next one as well. So my entry point is right here, right where this green candle is being pushed down. That is where I enter my sell, which is 3327.81. And then I take it down and I try to do 2 to 3 pips at a time. So the first 10, the second 20, 30, and then once I hit here and I see that it's going, then I might just do 2 again, just to be safe. Because when it comes to fair value gap, you have to be able to, especially when you're taking a sell, I always set my TPs halfway through the fair value gap. Why halfway through? Because chances are the entire reversal might not happen at once. So I always plan for that. That's why I put this red mark in the middle here, because the entire reversal will not happen at once. So you want to take your TP gradually and then watch to see how the market responds to now plan another entry in the future. I don't know if that makes sense. It's just my own simple way of kind of doing some risk management and taking it gradually at a time. And then setting the lot size. So depending on the size of the account, for gold, I would typically set the lot size, my lot size at 0.2 to 0.4. So for a 10,000 account, I'll do 0.1. But for a higher, like the 100,000 and the 200,000 accounts, I would set it at 0.2 or 0.4. 0.2 lot size would be if I'm very, very certain that this is going to, 0.2 will be if I'm not too certain and not too sure how the market would respond. But once I use the indicator and see that, okay, this is definitely going to be a short trade, then I would use a 0.4 lot size and take my pips and get out. So that's pretty much a straightforward way that I implement the SMC. I don't make it too complicated or too drawn out, because I have to be able to do these things very quickly and be done with it. So that's my quick take on how I use this system to pick the trades and then just do it on repeat over and over again. All right, Mr. Ezekiel.
Yeah, thank you, Dr. OJ. Please, if you got those value, put 111 to celebrate Dr. OJ. At least she has shown us our implementation plans. All right, our implementations, how she implemented the same fair value gap you were all taught last week. We were all taught last week, throughout last week. See implementation there. All right, please, 111.
Mr. Ezekiel, so basically, right? So sorry, sir. No, so basically, and I want people to understand, fair value gap is not a strategy in itself. It's just part of the process. Fair value gap is just you identifying the zone where you can actually take a trade in. So I want people to not look at it as, okay, it's a strategy. The strategy is SMC. And SMC is a combination of identifying key zones. And that is where, I went from the day to the hourly and then the minute chart. So you have to be able to go through that process, not only to at least understand what the market trend is, first of all, and then to now identify the zone that you're going to be working in. So those key zones let you know, okay, what is the high and the low points? That is your support and resistance where you're going to be taking your trade. So once you get, at least for me, once I get down to the 5-minute chart, then I'm able to look at my indicator. My indicator comes in on the 5-minute chart because I use the indicator for the final stroke of the whole SMC process, which is picking out the trade, so that way it's easier for me. So now it helps.
Sorry, Dr. OJ, let me ask you something. Before we show everybody that indicator, were you aware of it?
Before I showed it, before it was shown,
before we show everybody. Were you aware of that fair value gap by Los Aglo?
Not by Los Aglo. There were some other indicators that Mama Dupe, Dr. Dupe had shared with me that I used.
I'm like fair value gap indicator itself. Were you aware of it? Let me show it.
Yes, I was aware of it. Yes.
Of that indicator.
Yes, sir. Yes, sir.
Oh, okay.
All right, I didn't use it like that, but I was aware of it. Yes, because what's his name? Rich, attending some of his training sessions.
But Rich did not bring in that fair value gap into his trade, but he mentioned fair value gap. I just want to know if, just to create impressions, if actually what we thought, as bringing it in now makes a lot of sense and makes the difference as well. So that
you're talking about the indicator itself, right?
The Los Aglo fair value gap.
I learned that from you. That was from you. That was when you brought it up. Yes.
That you marked out.
That was from you. I was using a different one, but that particular Los Aglo one was from you.
Okay. So please, everybody, we were on the same session and we got the same value, and Dr. OJ is killing it. So you have no excuse anymore. So just that same Los Aglo fair value gap, and then do your analysis from top down. Implement it today and tell us the results tomorrow. We are not adding any JARA to this. Let's stay on this now, on SMC and this aspect of you being able to do exploit with SMC, do your analysis from top down, 4 hours, in 1 hour, know the direction of the market, stay at the time frame you want to trade, implement your fair value gap, do the reversal strategy like Dr. OJ did, and show us your results. All right, is it a deal, everybody? If it's a deal, put 111 on the chat box and we are done. No plenty stories. All right, put 111 if it's a deal. Everybody, let's go. I want to be sure it's a deal.
We have
it's only Gloria. All right. I'm seeing Gloria. Only Gloria is responding that it's a deal. If it's a deal, everybody put 111. 111. Let's keep it simple. 111, everyone. 111.
Mr. Ezekiel.
Yes, Mama.
Okay, before you close this call, I want to quickly say something. So no matter how good a strategy is, you must not trade against the news.
Yes, Mama.
So always sound this so that they know that before they are setting, their confirmation checklist have been met, and before they enter the market, never you trade against the news. Because most times what a lot of traders do is this. Like me, what I do when my setup, my confirmation checklist have been met, I go in full time and I just take my pips and come out of the market. So you see, if I'm trading against the news, it's going to finish me. Let's say the news goes against me, it's going to be a finish, as in it will knock me out completely. So no matter how good your strategy is, don't trade against the news. Please, except you're somebody that trades news. Thank you.
Thank you,
Mama.
Hey, Forex Lady Bus there. Please give our Forex Lady Bus. Thank you so much, Sister Blessing. So, guys, based on what Sister Blessing said, I just dropped a resource in the chat. So please copy that link. That is where you go first thing in the morning, forexfactory.com. So to know what's going on. Yeah, Cornell, sorry. Yeah, sorry.
So, Doctor, thank you so much value. What we're doing now is to take, someone that I respect so much. He said, a theory is a supposition based upon ignorance of the subject matter under discussion. A theory is a supposition based upon ignorance of the subject matter under discussion. So we're taking this 10 a.m. session, aside from the trade calls for the compounding, aside from the compounding that we're doing, we're taking this 10 a.m. session practical application, not just theories. We've learned SMC, we've learned Rich Van Deger's strategy, we've learned this, but you cannot take winning trades on your own. So you become a broke professor. All right. I think at this point, let's stop the recording. This is an in-house conversation. So